So let's get started on the final part of this session. Now, I want to go over basic candles. Each of you should know, all know about these candlestick patterns. These are just basic candles. Long candle here. This is a strong buying session, strong selling session, white and black. The middle of that candle, the midpoint or the pivot point, is a very useful support resistance level. So I'm going to keep dropping kind of useful information or some kind of experience tips for you. So please feel free to note this down if it's of interest. Big candlesticks are very important. They tell you a lot about maybe potential breakouts or potential rallies or sharp selling in the market. But the middle of that range is actually quite useful, especially for intraday trading. Doji is basically where the market open and close is either the same or narrow. So the market opened, pushed up, pushed down, but then closed exactly where it opened or near where it opened. And basically it shows that the market is tired or there's indecision. There's a little kind of gray psychology in terms of which direction the market wants to move. Then there are variations of the first two, spinning top and high wave. Spinning top is basically where you have a small real body. The open and the close has a small kind of spread difference between the two. And this just shows that the prior trend is weak. And then lastly, high wave looks like a spinning top, but the difference is the shadows, the long lines, are basically showing you volatility in the market. This indicates confusion, basically. So whenever you see this, it just shows you the market opened, pushed really high, pushed really low, and then closed in the center or near the center. So it just basically shows you that there was a lot of volatility, big price swings, and in the end the market kind of closed near the average of the day. Okay, so now we're going to switch on to the actual candlestick patterns. The key thing to keep in mind is there are many candlestick patterns, over 100. Keep in mind over 100. So the first really quick secret to success I'm going to share with you, which took me a while to learn in my experience. I started by memorizing every single candlestick pattern which existed. You can try and do that. It's a very long way to learn, and sometimes it's very boring, mechanical, and usually it's quite off-putting for people. So a lot of people decide not to use candlestick patterns because they're not too happy about the fact that there are so many candlestick patterns. Remember, 100 different candlestick patterns. So one of the quick ways that you can fast-track your learning in identifying these patterns and obviously trading off them ultimately is by realizing that each of these patterns fall into categories or family groups. So if you just think of two groups, as you can see here, reversal patterns and continuation patterns. Reversal patterns, continuation patterns. Now remember I said almost 80% of candlestick patterns are reversal patterns. So point number one, straight off from the top, before you learn any candlestick pattern out there, just realize they fall into two categories, reversal patterns or continuation patterns, and the reversal patterns account to over 80%. Is everyone clear on that? So straight away, you've just cut through a lot of information, and you've made a very kind of important understanding point. The other point that you need to keep in mind is that each of these patterns fall into even smaller categories, time categories. So how much time did it take for the pattern to form? So for example, this list is the one-day category, the family of one-day patterns. Everyone clear on that? A long candlestick, Marabou, Doji, hammer, inverted hammer, shooting star, hanging man. Everyone okay on the point that I'm making? So this list here, which I'm circling with the mouse, is a list of one-day patterns. Then we move on to two-day patterns. Two-day patterns, so you can see here, engulfing, harami cross, dark tag clover, and so on and so on. Continuation patterns, rising window, falling window, separating lines. Everyone with me? Okay, and then finally we have 3-day patterns, 4-day patterns, even 5-way patterns. Can everyone see how this is just so much easier now? Suddenly you just look through the microscope and just seen through all the noise, seen through all the trees in the forest. Okay, so straight away, whenever you pick up Candlestick book, whenever you see any Candlestick pattern from now on, just please promise me that you will just look at this idea of dividing it into groups. First of all, two groups: reversal patterns, continuation patterns, and then smaller groups of time groups. So how long does it take for the pattern to develop? 1 day, 2 days, 3 days, 4 days, 5 days. Now keep in mind, they don't have to just be days. It can be for intraday trading, minutes. For daily trading, days. For weeks, weeks. So this can be any time frame that you look at. Is everyone clear on that? Okay, great. Now I'll go on to popular pattern. So a lot of people trade the Doji pattern because it's very easy to identify. And I'll just remind you, it's when the open and the close are the same, or they're narrow, that they're very close to each other, and it shows you that the market is tired.